Hi, everyone. It's Bayo, CEO of Dr. Breathe Easy Capital. And we have a webinar session that we're getting started. We were doing a webinar last year, and we kind of put a pause to it. I'm not sure exactly what happened, but we're bringing it back. And this time, we plan to be consistent. So for now, we plan to do this every 2 weeks. Ability for people to come in and ask questions regarding a certain topic. We have few topics lined up. Like today, we're going to be talking about how to find deals, especially in this current market. And we have our acquisition manager here, Josh Harmon. He's going to be introducing himself later, and he's going to be talking about how he finds deals, and he's very good and efficient at it. Also, we plan in 2 weeks' time, we're going to be talking about short-term rentals, and I know there's a lot of people that are very interested to know about that. And 2 weeks after that, we plan to talk about oil and gas and the tax benefits, which I know it's going to be very important for high income earners like us. So so let's get started. I'm going to let George introduce himself. He's also a member of the team.
Good evening, guys. Pleasure to be with you this evening. We look forward to providing value in many different ways, and I'm excited to kind of get this started with this really strong team. I reside in Houston, Texas. I'm a CEO and founder of Time Health Capital, syndication investment company. I'm an orthopedic surgeon by trade. Been practicing here for 8 years, started my own practice this year. My journey into real estate started in 2016. I was able to invest as a limited partner in a surgery center, out of which I also worked. And then in 2018, I started the journey into LPs and syndications through large multifamily. And since that time, I've invested in about 20 deals passively. And most of them have been value add multifamily deals. Some have been also development, also investing in agriculture and oil and gas. So broadening kind of the scope in the asset classes and diversifying. This past year, I've joined a ecosystem for education and networking. And that has allowed me to gain access to other co-GPs, other sponsors, experienced sponsors, and finally got my first co-GP deal in May of this year, 13 units. So looking to just continue on my real estate journey and help other physicians kind of realize the benefits of both passive and active investing. So I'll pass it over to Josh.
Hey, what's up, everybody? Joshua Harmon Sr., principal broker and owner of Harmon Real Estate Company. Also doing acquisitions with Dr. Breathe Easy Capital. So super excited about that new opportunity to work with Bio and George. Really, really excited to grow with these guys, and the high level conversation has been great so far. So like I said, I own my own real estate brokerage, commercial real estate brokerage in the Fort Smith market, which is the second largest city in Fort Smith. So in Arkansas. So, really hustling in this market, for the past six years, getting acclimated with all the owners and all the assets. And, over the past 12 months, I got into the acquisition side, sitting in the operator seat. So I own 314 units personally. 90 of those units are just, all me, for the most part. The other, units I've been in partnerships, and, me and Bio are working on the 77 unit right now that we're closing at the end of this month. So that's a huge opportunity for us. We're really excited about that. So, that's the long and the short about me.
Thanks, Josh. And so I'm going to open it up with just the way typical people, find deals. Okay. So most people, when they want to do, real estate investments, and they want to do it actively. So what do? So you go on Zillow, you find some deals that is already there. And yes, we all started there. I was looking for deals over there, and I even bought my first deal off already published deal, okay? But the upside is usually very low, especially if you don't know exactly how to turn it around. Also, by the time you see this deal, it's already too late. At least like 20 different people that have analyzed the deal and then said no to the deal. And then, so it's going to take basically a miracle for you to be able to turn that deal over. So after a while, I started using experienced brokers, to find new deals. And so that also worked for a little bit. Then I tried wholesalers. Basically, they go find you a deal off market, and then they put a percentage on it. Problem with that is you have to do some of your own due diligence with, because you could get a deal and then the paperwork is not complete, okay? And, so it's different. A wholesaler is not necessarily a real estate agent. Most of them, they're actually not one. So which means they are not banned by many of the professional punitive, punishment if things go wrong, okay? So you can buy from a wholesaler and there may be a lien on the property and then you're just on your own. So it's just something to watch out for. So ultimately, I met Josh, who is an operator and also a real estate, a principal broker, really, not just a real estate agent. So he owns his own company, so the partnership is the ultimate partnership, because then he has all the strategy to find the deals, and also he can help with operations and to also help turn over the property. So I'm going to give it back to Josh just to, take us through his process and how he achieved this.
Awesome. Thank you, Bio. I appreciate it. So we'll get right to it because we don't have we got some time, but I want to leave a bunch of time for questions because, I know everybody on this call wants to learn how to get, shrink the proximity to the deals. Like that's the most important thing, is shrinking the proximity. So however you do that, that's your prerogative, but I'm going to give you just a few ways that I personally find deals. A little bit more about me. I do about $50 million of transactions per year. So I'll be considered a boutique brokerage, with that volume size. Most of my deals that I'm selling to my clients are small to medium sized apartment complex. So, I rarely sell a duplex or a house. Most of the time, we're looking anywhere between 8 units all the way up to 100. We're not really doing much more than 100 units through my brokerage. So the Fort Smith, Arkansas market, it's great. But at the end of the day, we are a tertiary market or secondary market, I would say. We're not a Tulsa, we're not a Oklahoma City, we're not a Little Rock, Arkansas. So I'm able to do some of these strategies that are more boots on the ground, and they really, really work for me. So we'll get it started. Number one is through brokers. So we all know that brokers have the keys to the assets that we want to own. But at the end of the day, you got to figure out how to be chosen, right? How do you build that relationship? And when they get a deal, why would they call you over anyone else, right? So it's going to be hard. Me and Bio and George talked, before you guys got on about, basically folks hitting the lead principal broker or the senior director directly. Like those guys are established in this business. Some of them are young like me and they've been in the business for 6 to 8 years. Some have been in the business for 40 years, right? So they don't really have time to take your phone call when you say, hey, do you got a deal, right? So I would probably recommend reaching out to a junior associate. Anytime you're seeing a listing, for the most part, from a Marcus and Millichap, Gray Steel, Cushman Wakefield, they have several different positions of real estate agents. It's not just the senior director. You've got junior directors, you've got, analysts, you've got several different people who are part of the transaction and a part of that deal finding process. I would recommend probably reaching out to those junior associates who have more time on their hands, who are tasked with prospecting, who are tasked with some of the boots on the ground tasks, as opposed to the senior director who may not do day-to-day prospecting. They may have a list of 10 deals that, their agents have found, and then their job is to get a listing agreement. So I would probably reach out to those junior associates who are actually reaching out directly to owners, sending texts, sending emails, doing all the strategies that I'm going to go through today on their own. Like that's their full-time job and they have time on their hands. You know, these junior associates are typically paid salaries, which aren't very much. And then they get a piece of the commission, which is very diluted after 5 or 6 different team members get paid. So you being able to reach out to them directly and give them an opportunity to bring a quality buyer to the table is huge for them. So, you know, I believe that, you know, you guys should reach out to some of those junior associates and try to build those relationships there. The next thing that it has been a game changer. I've had clients do this for me in the past, and George really wanted me to talk about, hey, how do you want to be approached as a broker? Because I think that that gets lost. And I didn't even think about that. How do I want to be approached? The way I would like to be approached, if there's somebody who's serious about buying, they've done their research on a specific market. They're not just saying, hey, I'm buying in Arkansas. Fort Smith came up on the map. I want you to send me the financials. Well, I'll send you the financials, but that's not necessarily building a relationship, at least not a long-term one. What I would say is, hey, reach out to me and say, or reach out to any of your prospective brokers that you want to build a relationship with and say, hey, look, I've done extensive research in this market. Here are a list of 10 properties that I've seen that I will probably purchase. That's a game changer right there. Depending on your strategy, and if those assets are consistent, that gives these brokers a real good idea of, hey, if these 10 properties come on the market, you're a real player for that deal, right? So I think that's huge in itself, because they may already know one of those owners who are, 4 years out of 5 on a 5-year balloon. And they know that, hey, look, that deal needs to be traded soon because I just sold them that deal 4 years ago, right? And they had a 5-year exit plan when I sold it to them. Like, those brokers keep that mental clock on these transactions. But you also have some of these big box brokerages who have databases, internal databases that tell them when a deal is likely to trade, who owns what, when's the last time it traded, what was the financials when they sold it. So if you give a broker a list of properties, that gives them a really, really good idea of what you would purchase. But then also, if they find an asset similar to that buy box, they may send that to you as well. So I really recommend doing your research. If you're in Houston, drive around, look in the markets you like, write down some addresses, put that in a database, make it look nice, and be able to explain why these assets are interesting to you. And I can guarantee you that a broker would be willing to reach out to one of those owners, and they may know one of those owners, and reach out to them directly. So I think that's a game changer there. The next thing I want to talk about is direct mail. So Bio, do you mind pulling up the ListSource? So ListSource is a database that I used to use when I was brand new in the business. Wholesalers use this website, and it's a database where you can put in specific criteria and, pull a list. You could buy a list, right? So like everybody says, hey, buy a list of multifamily owners, but how do you do that? I think this was a game changer for me, right? So I look up absentee owned duplexes in Northwest Arkansas to Fort Smith, and I found 1,755, right? So like that's a lot of data. I like to shrink those lists a lot more because that's probably too big of a list for me to actually, send direct mail to. Sending direct mail out to 1,700 people is probably too much. I like to condense these lists below 1,000. So the River Valley multifamily list that I pulled back in 2020, I just go back in once a year and cross-check it, right? And it updates that list. So, this was a game changer for me. If you want to go to Quick List real quick, Bio, go up to Quick List. You can see some of the categories here. You can also type in your own criteria like I did on the front page and, dial in on specific cities, specific zip codes. There's also strategies in here where you can see that they can't receive mail, which lets you know that it's an absentee owned property. I used to do that with duplexes because obviously you don't want to send mail to a duplex owner who lives in the property. I'm trying to find an investor, right? So these are all the different type of categories here, but you have criteria for duplexes, apartments, townhomes, single family. You can pretty much find any type of property and pull a list based on that. And Bio, if you don't mind going to the Excel spreadsheet so I can show them. So this is a multifamily owner list. It shows you the owner name, the mailing address, the mailing city, all the way down to the property address. So, there's some websites where you purchase lists and you can get a probable phone number or an email, and you just got to hit the phones. I mean, this is how you get proximity to deals. You're wondering how do I find deals? You got to get your boots on the ground. You got to find the information, and you need to educate yourself on the assets in the market. So I think that's very, very important when you're dialing in on, your criteria as a buyer. You need to know what assets are out there. So, maybe drive around a little bit first, but this is, the way you get that information without driving around. So, that's probably what I would recommend. And I'm sure I'll get quite a few questions on ListSource and how I get this data. The next thing I'm going to talk about is driving for dollars. So, the other way that you can send a list of properties to your broker is just driving around, getting educated, getting in your car, getting a full tank of gas, and just identifying assets, secret shopping. So, this is a hands-on business. This isn't a business where, you can just pick it up when you want to, a market when you want to, and prospect when you want to. So as a busy medical professional, it is difficult. This is not an easy thing to do. And it takes a lot of systems and time to shrink that proximity to the deals that you want to get, that you want to buy, right? So the next thing I want to talk about is CoStar. If you don't mind pulling up a CoStar report for me, Bio. And I apologize, Bio's helping me out because I'm not as tech savvy with screen sharing and things like that. So he's helping me out a little bit. But CoStar is a company that's associated with LoopNet, and some of you may have used it. Most of you probably haven't, because this system cost me $800 a month on a discount in order to have access to every property across the country. So I can pretty much any property that CoStar or LoopNet has in their database, I can get underwriting on it. So CoStar, like I said, I pay $800 a month personally. So if you're curious how much this stuff costs, it's very expensive. Right. But what this gives you the opportunity to do, you get a broker who sends you a deal, you can immediately type it in CoStar and get some underwriting reports on this deal. Right. You can find out what their rental rates have been online. So if they post their rental apartments, if they post their apartments on apartments.com, that information is going to get filtered through CoStar. Right. So most of the deals that us on this phone call are looking for have scale. So they're probably going to have information on that deal that you've been looking at, right? So you put that deal in, you put the address in CoStar, it pulls up sales comps. It allows you to pull up rental comps, all kind of underwriting reports. And it really shows you the back end of how these deals operate, when they traded, who they traded to, what's their contact information. So it's a very in-depth system. And if you want to pull up that report so they can kind of take a look at it. So this is a deal that I looked at, a couple of years ago. And every deal that I find, I'm always looking in CoStar. I want to know what information they have on. I don't want to rely on the broker and what criteria they put in CoStar to pull their report. I want to pull a full underwriting report, and I want to see everything, not just the 4-pager that they sent us. So Bio, how many pages does this full underwriting report have?
135.
135 pages, right? So this is information, as a medical professional. I know you guys love data. I know you guys love information. And this is all the information you need to make a pretty good and informed decision on if it's a good opportunity to move forward with, right? You still need to get into the T12. You still need to get into the rent roll. You still need to do your secret shopping. You still need to talk to your property manager. But having this information on your side gives you a heads up. And it also allows you to prospect, right? So if you want to scroll down a little bit, Bio, here it goes. Page 4, I was right. So I don't even have this report in front of me. And I knew page 4 was the subject property page because I've looked at so many of these. It tells you how many parking spaces, the year built, who the owner is, what's their phone number, how much did they pay for it in 2013, right? So this is a lot of information. It's a lot of information, and it gets all the way down to construction surveys. So it'll tell you how many, starts, construction starts are in maybe a 5 to 10 mile radius. Sometimes they do the whole city if the city's small enough. So it gives you pictures. It does pretty much everything. So if you want to cheat code, you got the finances to do it. You got the time to actually get on here and learn how to use the platform, then I think this is a huge high level resource. So I've showed you guys ListSource, which is, wholesalers use that, right? We talk about people who may do 2 to 3 transactions a year and make, $5,000 a transaction. They use ListSource. The high level investors, the equity funds, they have their own systems, but I'll guarantee you they have CoStar as well, pulling information and data. So enough on CoStar. I don't want to plug them too much because they don't pay me or anything. But it's a huge resource for me as a broker. And I think it could be a huge resource for you investors, you savvy investors who want to get into GPC, get into operator C and learn more how to, grow on that side. The next thing, property managers. Property managers are, they're a resource, right? So like, I don't discount that you can find a deal through a property manager, but I guarantee you every property manager that takes on a client, they've had a question of, do you have a deal? Or do you have anything in your back pocket? Like we get property managers and brokers get tired of hearing that question, because I guarantee we have something in our back pocket. We've pitched it. We know the buyers, we know the real players, and it's just hard for us to, kind of slow down and just, bring you guys along and up to speed to where we currently are, right? So you need to get acclimated into that person's business. And that goes for property managers as well. You definitely want to give them criteria of what you're looking for. You definitely want to make, probably a monthly call or a quarterly call to them just to see, hey, do you have anything in your portfolio that may be trading? We want to keep that business in-house, position it that way. I think that's a huge way to go about it. Me being a broker, I'm reaching out to every property management company in the area. Usually when they hear from me, they know that one of their properties in their portfolio is trading. So sometimes I get a good response. Sometimes I get a bad response, right? But as an investor, you're sitting in a different seat. You can go up to them and say, hey, look, I want to keep this in your portfolio. I don't have any intentions of taking this property outside of your portfolio. If you bring me a deal, I'm more than happy to have you manage it. I think that's a huge, huge, huge way to, find some off-market deals in today's market. You're going to see a lot of people who just didn't finance their deal right. They paid too much, or they're in the middle of a remodel and they're undercapitalized. The property managers are going to know that stuff first. The brokers aren't going to know it first. The property managers will, because they're operating day to day. So if you keep those relationships going, you keep those relationships active, and you're very specific on what you're looking for, I think that property managers are more than happy to bring you deals. But don't just come up to them and say, hey, you got anything in your back pocket? I mean, it's just not an effective way to communicate with a property manager. And the last thing I wanted to talk about is vendors. So quick story, I just bought a 24 unit that Bio actually helped me with. He came right on time in the last second. I had an issue with funding my deal. He actually, helped us fill that gap, found us an investor. But what I didn't tell Bio is I actually found that deal through a wholesaler who found the deal through a foundation company. So a foundation company went out and gave a seller a quote or owner a quote and mentioned, hey, I'm not paying for that. I'm probably going to sell the property. That foundation company reached out to a wholesaler / broker who couldn't buy the deal. They don't have enough capital to do it, who reached out to me to see if I had any buyers for the deal. And I said, hey, I'm a buyer. I'll take that. 24 units of townhomes, laundry hookups, 2-bed, 1.5 bath units with central heat and air. I'll take that. Right. So like vendors, you want to get connected with vendors as well. Who are the vendors that are working in the multifamily space? So what plumbers specialize in multifamily? Electricians, contractors, roofers. You can go the old school way of literally writing down any vendor that may be in the multifamily space and just call them, right? Just call some vendors in markets that you're interested in, see if they're familiar with any deals that may be trading. But like I said, the most important thing with all these steps is just being in the game. And it's very, very hard for a lot of people to be in the game every single day at all times. Bio, I don't even know how he makes time for all this stuff. I have no clue. George, I don't have any clue how you make time for all this stuff. I'm full-time in the business, and I find it very hard for me today to still get out and prospect and look for new deals. So it's got to be difficult for people with full-time jobs. is very difficult. And, 5 years ago, 6 years ago, any deal you touched was going to appreciate, right? We now are in a market today where you have to buy carefully. You can't just buy anything and it turn to gold. That's not the market we're in today. I think we got to buy right so we can operate them, because it's an operator's market right now. You got to find deals that you can actually operate, add value to, and then realize the profits when the market recovers. 2 to 5 years is what everybody's saying, anywhere between 2 to 5. You may feel some pain for the next 6 months. The next year and a half may be a little choppy, not the same as what we've been dealing with. And a lot of people think we're going to come out on the other side after their election, right? That's what most people are saying. But at the end of the day, you still got to find deals that pencil. So these are ways for you to find deals that can actually pencil, shrink the proximity for you guys to, actual deals, and not just, what we've been dealing with the past 5 years is, hey, you buy something and everything turns to gold. Those days are over. You got to buy carefully, which means that you have to do more prospecting if you want to be in the operator seat. And this is how I find my deals. I own 314 units. I have never purchased a property from another broker, ever. Every deal that I've ever purchased has been a deal that I've sourced. And so, I'm talking from a space where I am very confident in my abilities over the next 2 to 5 years to weather the storm. Because if somebody hears about a deal in, Tulsa, Oklahoma City, or Fort Smith, Arkansas, I'm going to hear about it, right? I'm going to hear about it. I'm going to know it's traded. I'm going to be familiar with the groups that are purchasing. I'm going to be familiar with, the sellers who are trying to get out of the market and recapitalize. So, if you have time to do all these steps, great. But if you don't, I think, our platform is great for you to get plugged up to, get educated on how we do these things, and, possibly, invest with us. So, if I don't really have anything else, if you guys want to open up the questions, I think, now would be a pretty good time, right?
Well, thank you, Josh. Yeah, I think, right on time. Let's go over some of the questions that we have. So far, we only have one question, which is your operator only operating in the South? So are you only operating in the South?
To be honest, as a broker, I don't venture outside of Fort Smith, Arkansas very much. That's the funny thing. I've sold a couple thousand doors over the course of maybe 3 years or so, 4 years. And I don't venture outside of the Fort Smith area very much as a broker. Now, as an investor, I love Tulsa. I love Oklahoma City. I still like Fort Smith because I'm familiar with it. I know it like the back of my hand, but personally as a broker, I don't venture out of this, 30-mile radius very much.
George?
Yeah. Hey, great talk, Josh. While we wait for more questions to potentially come in, I was curious, I've done quite a few investments as an LP. Sometimes I'll, get a chance to kind of look at a CoStar. One question that I would always kind of pop in my head, and I'm wondering if maybe some other investors on the call have had this, is in the CoStar, how do those comparables actually make it to the analysis? How does that, what's the decision making, for that to end up there? Because there's so many, that can be chosen from, right, throughout a submarket. How does that process work?
That's a good question. So CoStar is based out of Richmond, Virginia, where I'm originally from. So they got a huge office space there, and they got a lot of analysts in there. They got a lot of people who personally call me once to twice a month. Hey, have you sold this deal? Hey, what did it trade for? Hey, what's the cap rate? Do you have any financials? What was the NOI? So they got people who actually call directly to brokers and sellers and buyers and ask for the information. Like they physically ask for it. If you get in CoStar, if you get deep enough into it, they actually have some people's, some investors' mortgages on CoStar. Like you can look at someone's mortgage because it's on the deed, right? So like it's recorded with the municipality. So if they're able to get that information, they'll post it on there too, and you'll know exactly what kind of debt somebody has, which is insane to me.
So David's asking, a lot of the talk is about multifamily deals. Seems like single family investments have fallen out of favor. Any good reason to look at single family property in this market?
Oh, absolutely. I mean, I think single family is a great way to, get into the business. I've very rarely found an investor who is in single family that wants to be in single family long term. A lot of times it's just the base for them to either get out of their jobs, because I think a lot of investors or a lot of aspiring investors, they kind of skip a step. So you don't really look at, hey, the step of let me step out of my job first and then scale. Everybody just wants to scale, and just along the way, they'll get out of their job. A lot of the single family investors, I think, are smart because it gives them an opportunity to get a stable base. A lot of times you're going to have a lot of equity in those single family deals because equity is the name of the game. Comparables are the name of the game. So hopefully you got single family with equity. And I know groups who own 300-400 units, and they constantly just use their 40 single family houses that they bought 15 years ago to use the equity to buy more multifamily. Like they just cycle the equity through. So when they do a refinance, they pay the houses back off. When they want to acquire, they do a line of credit, and they just kind of go that way. So single family is still a way for you to, graduate into multifamily, but multifamily is the only space where you can literally just across the board buy the same paint color, use one manager, use one maintenance tech, have a termite company and come to one building and charge you significantly less because they don't have to travel, right? So like right now, I'm dealing with a lot of my properties are garden style apartments, 2-story, just your typical stuff, value add. And, roaches in the wintertime is terrible. I mean, you can't, they want to come inside too, right? So but the great thing is if I call a pest control company, they're just coming to one building, right? Like they don't have to travel all the way across the world and charge me, $100 or $200 every time they go. They may charge me effectively $15 a door when they come out to spray, which is insane. Just the economies of scale, multifamily, is just unprecedented.
Great talk, Josh, and fantastic to see this collaboration between Bayo, George, I guess Mrs. Fasaya, and Josh. It's really cool to see y'all collaborating. Congrats, and certainly, look forward to hearing more with future webinars. Just a quick question for you, Josh. For your properties so far, are you self-managing them? I know this may be a little off topic, and if you're not, if you are, what threshold do you think you would bring in a property manager, manage them?
That's a good question, man. I mean, I currently self-manage most of my portfolio. I got 145 units that I do not manage myself. And, me as an operator, I feel really comfortable operating, small to medium-sized apartment complexes. So anything up to about 75 units, I can handle on my own, especially if it's within reach for me, like the Fort Smith area. Bayo and George and I have been looking at some deals outside of the Fort Smith area, like, the Tulsa market. I can't manage anything that far. I just don't have the resources to do so, especially when a lot of my deals are early in the cycle. A lot of them are value add. So I'm going in spending anywhere from, $5,500 all the way up to about $18,000 per unit in renovations, just kind of depending. So I don't want to hand that off to a property manager in that condition because, I just don't feel comfortable. I don't want a $10 or $12 an hour employee managing my assets that are very valuable to me. So, right now I'm keeping it in the house, long and the short. If we go outside of our market, George is going to probably be bringing some deals in Houston. I can't manage nothing in Houston. We're going to have to hire third party. Bayo has some relationships with some great property managers that I'm excited to work with as well. So as we scale, it will definitely be, outsourced.
I know it sounds a little bit off topic and we might be jumping to maybe the next possible webinar, but could you talk a little bit about how you build relationship with banks for financing? We've talked about building relationships and kind of getting your face known and starting something with brokers, agents, property manager. How do you start to build relationship with local banks for financing for real estate buying, or is it better to just look for somebody with the best deal and best rate and that's it, just move on to the next one? Or do you I struggle with that.
Sorry, that's a good question. That's a good question, David. I'll answer first, and I'll give the other guys a chance to answer, since it is a question they'll probably be able to answer in a unique way as well. Like I said, I'm full-time, David. So, I'm speaking with lenders every single day. Every single day. I promise you, I'm speaking with lenders 6 days out of the week, pretty much, about one thing or another. Deals that I have actively. I've got a mortgage banker with Berkadia, which is based out of Chicago, one of the biggest mortgage companies in the country, especially in the multifamily space. And, they place a lot of debt. And, he's sending me deals on a weekly basis that are coming across his desk. None of them are penciled for me just yet, but I can literally send him a deal and he'll underwrite it the same day because he knows I'm a player, right? Like, he knows I can put the deal together. And I'm not just, trying to build a relationship with them. I'm trying to get deals done, right? So, like, I think the most important thing is to show those lenders that you're a buyer, that you can close, that you have the resources, that you have your teams in place. And you got to sell these people, man. They get paid when a deal closes. They don't get paid when somebody comes to shake their hand. So I think you need to appeal to that. And the guys and the investors who appeal to that, I think they're very successful. I think the ones that are spending way too much time trying to build the relationship rather than, hey, how do we work together, right? So I think that's the most important thing right now, is to reach out to as many as you can, and be able to be in position to actually get across the finish line with them with the deal. Bio, George, you guys have anything with that?
Yeah, I definitely want to add another route. I love that route, that persistence, that consistency route. It's excellent. I think it can serve you well. David, I believe you're a vascular surgeon, if I'm not mistaken. And so,
yes, I am.
And so just, I get it, man. You busy. And so that can be a hurdle. And I kind of spun my wheels 2-3 years ago trying to establish relationships. But when you're the new kid on the block, it can be tough. One thing that I found has helped, and it took me a while to warm up to this, was to join an ecosystem. And that way you can start to partner with folks who already have those relationships. You develop, a relationship with them, and then you leverage those connections. And that goes across all the vendors, not just lenders. You can start to establish through them relationships with brokers, property managers, contractors. All of that can be leveraged from those ecosystems. There's a lot of different ones out there. Take your time and make sure you vet them out if that's something that you want to consider. They're not all equal. Some of them are definitely better than others. So take your time and kind of go to meetups and meetings and webinars to feel the group out. So that's another route.
I'm going to add something. Thanks, George and Josh. I started with just myself, in that in local market, like Fort Smith, it's a little bit easier than a bigger market like Houston, New Jersey, because there's only very few lenders. So, and local lenders, they have an incentive to work with you because they also want to improve the community. So what I started with a bank that I did a private banking with other businesses and also my own other things that I do. So that's how I got started. But I also ran into the same roadblock as a new kid on the block. So I partner, as you all know before, I still partner with him. I have Gaurav, who was my partner. He has over 100 million, property under management. So he has lenders, and his strategy is not to stay local. His strategy is to buy properties wherever there's a deal. So he has teams everywhere across the United States. So I was able to piggyback on his team. Same way like George was saying, it's almost like you will almost always need someone else at first. But now at this stage, I'm able to negotiate a little bit more. I'm also able to dictate a little bit more. Like I would just send it to a bunch of lenders and let them compete over, over the deal now. And also over time, you will start getting access to the top executives, because before you always have to talk to, the secretary, then the cashier, then it just takes forever to, finally get to the person that makes the decision. But over time, you finally be able to develop relationship with the presidents of the banks, vice presidents, so that you can just talk to them and they know it's going to work. And they are the committee. So they just, get your deal through. And Josh and I, we ran through last year, we literally have to do a lot of work to, to get it across to the finish line.
We got another question in the chat.
Yep, this one's from Hamad. If there are people like you doing it full time, does a physician who can't hustle like you guys stand a chance to get good deals? I think we were talking about this before.
Oh, man.
I'll let Josh speak on that. Yep.
It's tough because like this is a point we knew this was going to come up, and it's valid. It's just valid, you guys. We're doing this full time. This is my full-time job. My family's livelihood is dependent on me finding deals. There is no way that I'm going to let somebody who's part-time get to a deal before me. And if you do, it's the needle in the haystack, right? It's not a consistent deal flow for you, right? My business is finding consistent deal flow. So, George and Bio, I think, they wanted to be very careful. We're not selling anything here. We're not pitching anybody to invest with us necessarily. We want that to happen organically, but at the end of the day, you have to get in. They both talked about it, relationships. Leverage those. Don't look at it as a disadvantage, like you can't compete with us. Work with us. Allow yourself to stand with us and get your foot on the ground, get your footing, get your teams in place, ask questions. You investing with a team like Dr. Breathe Easy Capital. You get to ask questions. You get to find out who the lenders are, who are the vendors. Hey, why did you go that route? Did you have any challenges? So I think it's a huge opportunity for you guys to, just like I've been talking about all day, it's just cut that proximity to what you're trying to accomplish. And everybody here is trying to get deals one way or the other. Some of us want to operate, some of us don't want to operate. Either way, you have to have a deal. Like nothing happens unless you find a deal. And, like I said, I'm full-time. I've been doing this for 8 years. I literally have every single multifamily owner name, mailing address, and most of their phone numbers and emails in the Fort Smith market. So, we do have an advantage. Long story short, we do have a significant advantage.
So I'm going to say you could also, try to find the top brokers, right, in your market. So find who are the people that are doing deals in your market. But just like Josh said, you're not going to go to the CEO, okay? You're not going to email the principal broker. So you have to start with the lower people that actually stay on the ground. And, so they might be able to send you some deals. And initially, you will still always get the deal after they've sent the deals to, and by the way, I'm going to introduce Julius Oni. They have over $145 million assets under management right now, and they are growing super fast. So he's an operator. So he was asking you the question early on. For example, consistently need deal flow, same way, and I'm sure it has to do with, talking to agents and also making connections. Julius, are you still there?
I'm here, brother.
Yeah. Can you tell us how you do your deal flow?
Josh mentioned a lot of the strategies, but one of the things that has worked really well for us over the last few years is actually going to the CoStar top broker page, identifying who those top brokers are because they transact in the most in the markets. And then we essentially have systemized the process where we send a LinkedIn, cold email to that broker, just congratulating them on winning, top broker for the last year. And our director of acquisitions essentially starts a conversation with them. And typically, to Josh's point, they're usually pretty busy. They don't want to talk to, the little players really. but then everybody likes to be complimented and congratulated. So they usually would respond. The conversation starts there. They start something really organic. And even if they are not the people, and then eventually the conversation gets to the point where they're asking, okay, what's your criteria? We have very, very streamlined, concise criteria. We send it to them. And then usually if they're not the ones transacting those deal sizes, they would be like, okay, I'll introduce you to my co-broker or my colleague who does that size or who is in that particular sub-market of the market that we're talking about. And usually if, for example, this person could be the vice president, in that company, in that brokerage firm, if they're the ones introducing you to the younger broker, that younger broker almost immediately takes you super serious and then starts to send you a lot of deals. And then once they start sending you a lot of deals, it's super important to be able to underwrite those deals expeditiously and give them very pointed feedback on why the deal works and why it doesn't work for you. And over time, once they see that your response time and the way that you're responding to the deals, because they usually will start with maybe bottom of the barrel deals, and eventually it's going to graduate. But if they see that you're responding, sometimes they will get in the habit of just sending you deals just to kind of get a sense of what the average buyer in the market is going to say about this deal, so that they could give the seller some feedback, because they know you like a quick responder. And then, from that point on, you develop some camaraderie with that broker, and eventually they're going to get some sweet deal and send it your way, and it's going to pencil, and then you take it down, and then it just goes from there. So for the successful, relationships we've developed with, Cushman and some other brokers, that's how we've really done it. And that's how we've been able to facilitate our growth.
That's awesome.
Yeah.
Very cool.
Thanks, Julius.
Okay, we got another question from Umer. First, for first-time investors, how much capital would you need to start investing in a good multifamily deal? And I'm assuming you're asking as a limited partner passive investor. So I can answer this since I've done about 20 of them so far. It varies really. And it changes not only between the type of asset it is, the market, the time frame of the cycle that you're in. You could be early in a multifamily cycle versus where we are now, we're late. So all of these things will play in to how much the minimum investment is, and therefore kind of what your threshold for entry is. I've seen some as low as 25,000, and I've seen some as low as 250,000 and even 1 million for a very large fund. Operator experience also makes a difference. So all of these things will come into factor. And now there's crowdsourcing. There's kind of these online crowdsourcing where you can even get in for lower than 25,000. So it really depends. I would say on average, the majority of them are between 50 and 100,000 for a minimum investment for most large multifamily deals.
It comes down to sometimes also like how much you're raising. So let's say you're trying to raise, $30 million. Okay. So if you're raising it at $25,000 each, you're going to have hundreds and hundreds, too many people, too many investors to coordinate, and sometimes it's better, to have it at a higher, minimum. So, usually less people, and also the kind of people that are coming in. So, usually people that have 100K to invest are different type of people than people that have $25,000 to invest in terms of experience. It's thought that people with, higher money have a lot of disposable income. They're more likely to be accredited investors, are more likely to be sophisticated, very advanced, So there's a lot of factors, but George is correct in terms of the average minimum, usually between 50 to 100 nowadays.